Good evening, ladies and gentlemen. Welcome to Market Gurus, a special show where we get you to meet the finest brains on the Lal Street, those who help you make money, create wealth in the least possible effort, and they build wealth over the medium to longer term. This episode is especially special because it comes after the very smart rally that you've seen on the Lal Street after Mr. Modi's stunning electoral victory in the three heartland states. The Nifty, as we all know, is up for the 8th day in a row, and most of the market is in record high territory. How to negotiate this market, how to make money in these levels, and how to go about creating wealth are the questions that we are going to put to a very fine gentleman, Mr. Feroze Azeez. He is the Deputy CEO of Anand Rathi Wealth, and a very fine gentleman when it comes to creating and helping wealthy clients amplify their wealth. He's been doing it for the past 20 years. Among them, the last 11 have been at Anand Rathi Wealth, and before that, Mr. Azeez has worked with Macquarie Private Wealth as also ABN AMRO. Feroze ji, it gives me distinct pleasure to welcome you. We've been out of touch over the last so many months, but possibly the best week to welcome you has been this one. A very, very warm welcome to you on Market Gurus, sir.
To be in your esteemed company, and thanks for the generous introduction. Of course, with respect to markets, you have a better grip on that. So the best thing I can do is listen in this show if you are around. But yeah, having said which, you're absolutely right. The markets have been on a roll, especially after what happened in the state elections and before the exit polls itself a couple of days back. I'm sure the ground reality was known. I think that's when we have had 8 straight sessions of markets closing up. So you're absolutely right. It's party time so far. And let's wait and watch what's the nuances of the party and how long do you expect it to last during the course of the while.
Ladies and gentlemen, we'll break this show into two parts, and this is an unusual market guru for you because Mr. Azeez would be setting up a portfolio of select mutual funds which you can start from today evening and begin this wonderful journey of creating wealth. So we are not going to talk about sectors, we are not going to talk about stocks, but we are going to create a fabulous portfolio for you which Mr. Azeez will author. Feroze ji, let's begin first. Tell me, how is the market placed at this point of time? Are you getting a feeling of a giddy sensation in your stomach, or is this rally here to stay? And if yes, what are the reasons?
Shelji, I think I would be very distinctly different in terms of the answers depending on who's asking this question. If an investor is asking this question, I couldn't be more confident that the expected return of 12 to 15% compounded, which doubles your money every 5 years, 15%. That's if an investor is asking this question, I'm at the epitome of belief that this is one of the best times in the India capital markets to get the fair expectation. When a trader is asking this question, of course, the variables which that person is going to be looking at to understand where the market is headed is going to be dramatically different. So point one, very confident for the investor. For a trader who's very agile, there are other very important variables to look out for. One of them, now that we are on the topic, I'll tell, which I have tracked, and for the last 7 times in the last 2.5 years, that one variable has played out beautifully, is the FII's long and short ratio in the index futures. Every time the long and short ratio gets skewed towards one side more than 80%, like on 26th October 2023, that was the expiry of October, that ratio was 84% favoring shorts. That implies that you were already overshot. So any positive trigger would mean huge amount of short covering. And earlier, the first 500 points came from the US as a good news. That cascaded into short covering. Then just after that was over, there is another exit lull, and then there was further short covering. Now we are at about 50-50 as a ratio. This has happened 7 times in the last year and a half or two, and all the times this one short-term variable has played out.
Right. So Feroze ji, let's get down to brass tacks. 2 or 3 things that you like in the present environment macroeconomically, which are working in favor of this fantastic bull run that we are seeing on the Lal Street?
Okay, so how I compartmentalize it is short term is going to be news dependent, medium term is going to be corporate earnings dependent, long term is going to be economy dependent. So news we have seen and has created some degree of short covering and the great news of stability in terms of government. Now earnings, I'll take about 10 seconds. Earnings of Nifty went up. We had got our earnings call right in August 2020. 530 rupees was the earnings of Nifty, went to 777, went to 819. This year we are looking at 944, and that seems to happen. So earnings is something which is a medium-term indicator. That's a tick mark. Now going to the long-term indicators, like you pointedly asked me, what are the variables of the economy side? I look at 6 variables. I'm not going to bore you with all the 6. GDP, GST, IIP data, fiscal deficit penetration, and I think these are good enough. Now let me touch upon fiscal deficit penetration. By this time, 7 months, government ends up spending 73% of their fiscal deficit. Is the long-term average. This year they've only spent 45%. That means large portion of the government spending is going to be backloaded, especially on the infrastructure. That will bring me to what am I more interested in. Rural demand will bring in certain sectors which become profitable. So GST is good, 1.68 lakh crores. GDP, IIP data, and fiscal deficit penetration are reasonable economic indicators for one to look out for.
Okay, now we are getting closer to where the action is. We need to see what the broad picture is. Feroze ji is very, very confident that the macro indicators are working fairly well to offer a conducive environment for this wonderful bull run that we are seeing. So, Feroze, now given the fact that most of our investing class are young people, you know, people in the age group of 25 to 40, and they are very anxious to deploy wealth as there is this feeling of missing out on the Lal Street. Where would you now allocate fresh money in terms of large caps, mid caps and small caps?
Large cap 50%, mid cap 20%, small cap 30%. Okay, this is a little contrarian because generally small cap is going to be a smaller proportion than, but this is a little over its head, if you can notice that. Why? Because mid cap is those 150 stocks. For a mutual fund investor, that's been very categorically defined as 150 stocks. It's nothing but these 3 indices which SEBI formed in 2018 for the mutual fund investor are a subset of NSE 500. And I personally believe that the bottom 250 have a lot of potential, but there is pockets of huge overvaluation also. There are some large stocks in the weights which are above 80p, 100p, 110p. So I'm not speaking about the full broader market, but if there are 250 stocks, and Shailji would be happy to know that the MSCI India Domestic Small Cap Index has 445 stocks. This was something which was very interesting piece of information for me. Indian domestic guys have 250 stocks, but a foreigner who's not sitting in India has 445 stocks. And there's a huge behavioral difference between the extra 195, which MSCI has in its index, and NSE does not have it in its small cap index. Those 190 stocks I analyzed, their foreign exposure, FII holding, has substantially increased this year, which implies that FII is using small cap also to play the India story.
Okay, so we have the asset allocation in front of us, and to my surprise, yes, that you have a 30% allocation to small caps. We'll also try and show you data as to how the small cap and the mid cap indices have outperformed the broad Nifty. Of course, the last 8 days have been fantastic for the Nifty, but believe me, when you look at the long-term picture, the story has not even begun as far as the large cap index is concerned. Nevertheless, you see very, very smart returns on small caps. I think it should be 43% year-to-date return on the Nifty small cap and 37-38% on the mid cap index. Now let's get down to building the portfolio, Feroze. What looks good in terms of funds, and which are the funds that you will buy? Let's start with 2 each. Which are the large cap entities that you look at the moment with a good eye?
Yes. Shailji, like you said, you have young investors who sometimes in the context of investing could be new ones who are just jumping in. So one principle before I get to the portfolio, just one of them, uh, when you invest in equity, you have to tell yourself before you cut the check that markets will fall 14.3% average every year from peak to trough. That's the average fall in the last 22 years. If you remove two exaggerated years, the rest of the 20 years, markets have fallen 14%. So if you're a beginner, if you can't digest this fact and then you cut your check and then you're surprised, why did the market fall? That's the nature of the beast. So having said which, now let me get to your pointed question, Shelji. On the large cap side, I don't think you need to take a conventional large cap fund to get a large cap exposure. Like a flexi cap and a large and mid cap are two schemes which have a skew towards large cap stocks, but they're not categorized as large cap. So DSP Equity Opportunities and HDFC Flexi Cap could be two funds which are large cap heavy, but not in nomenclature called large cap. Because if you look at HDFC Flexi Cap, you will see that Roshi Jain, who took over the portfolio from September 2021, has done a phenomenal job. If you look at her right to wrong ratio of all the decisions she has taken on a large fund like this and taking care of Prashant Jain's legacy, I think she's done a fair job in terms of the right to wrong ratio, favoring 8 rights to every 10 taken. So that's one. And DSP Equity Opportunities is a larger mid cap scheme, which I think is a good one.
Okay.
These two will give you a reasonable large cap exposure.
Okay, we'll just discuss these two equity funds in detail. Of course, HDFC Flexi Cap Fund is the big daddy of them all. This fund was launched in January of 1995, and over the past 5 plus 23, 28 years, HDFC Flexi Cap Fund has given a CAGR return of 18.7%. So every 3 years, your money has doubled in this particular fund. And if you look at the top holdings, they are HDFC Bank, ICICI Bank, NTPC, and HCL Tech. Over the last 3 years, the CAGR on HDFC Flexi Cap Fund has been 29%. DSP Equity Opportunities Fund, 8,800 crores. 3 years CAGR is 23%. And since launch, May 2000, the fund has returned 17.7%. This takes care of the large cap and the flexi cap scenario. Feroze, I just wanted to understand, why are you choosing a flexi cap fund? What is the freedom that the fund manager enjoys in this category?
The freedom he enjoys is that it's absolutely flexible. So if now, for example, if a mutual fund investor, like we were bullish from 3rd Jan this year on small cap, but let's assume the small cap outperformance is humongous. A fund manager finds it very easy on a zero tax basis. He can sell his small cap stocks, go to large cap. He can use the agility to move. But an investor who's just invested in a fund 9 months before finds it very difficult to come to terms to exit a small cap fund. Then if I told a client that you have to sell it, he asked me, "Yaar, abhi to tumne bola tha ki buy karna hai." So when you go right sooner, sometimes it becomes a problem. That you got. So agility being used effectively is what a flexi cap can do. And I hope and I know HDFC Flexi Cap has been your favorite as well, and you've been propagating this as a professional for long periods of time. So anybody who's heard you has actually realized the return which you read out.
Okay, let me just share an interesting aside. The HDFC Flexi Cap Fund has a net asset value of 1,569 rupees. And as Feroze points out, this is something that I have benefited from. Feroze, I'll tell you this, that my purchase of this particular fund is at an NAV of 14.7 rupees. So it's a 100 bagger for me when it comes to funds, and it's created immense wealth by doing nothing at all at my end. I just trusted the money with what was then called HDFC Equity, and I was very pleasantly surprised to see the NAV today when I was just making notes for you to discuss. So wonderful journey so far on HDFC Flexi Cap Fund and DSP Equity Opportunities Fund. Feroze, one question that a lot of investors ask us when they communicate to us is, when the fund has such a high NAV of say 1500 rupees, 1400 rupees, they are attracted to an NAV of 10 rupees, 11 rupees. Could you please explain that this is a myth that the NAV of a particular fund should be a deciding authority in where to invest and where not to?
Absolutely not in the mutual fund arena. And the reason, which is what is important, if I say no, then I have to substantiate that claim. Whenever there is a limited supply, like when you are looking at stocks, now, if there is a stock which has only 1 crore outstanding shares, demand and supply will impact its price. But in a mutual fund, there is no such limit that these are the maximum number of units which will be there. Because in open-ended scheme, if tomorrow one of my clients says, I want to buy 100 crore of HDFC Flexi Cap fund, the number of units corresponding to the 100 crore will be printed and given it to him. So demand and supply does not impact any instrument which has unlimited supply. So mutual fund units have unlimited supply, unlike a stock where there is a limited number of share capital, number of shares which are outstanding by any company. So that's why price has nothing to do with its future potential earning, and neither does demand and supply.
Right. And this is one myth that Feroze Bhai has busted really well. Do not go by the value of the NAV of the fund. Go by what the fund can do for you from that level onwards. So we've done two large caps, Feroze ji, DSP Equity Opportunities Fund and HDFC Flexi Cap. Let's shift gears and look at mid caps. What looks good to you, sir? Two funds from this space.
Kotak Emerging Equities, Pankaj Chibirwal is the fund manager momentarily, but there is a possibility that he moves on. But Harsh Upadhyay, who is the CIO, who has always been there, is one person I'm confident can take forward Pankaj's legacy. That's point one. So that's why it continues to be in our recommendation. And on the small cap side, Chirag Setalwad's HDFC Small Cap. And there are very, very strong three reasons why I would pick it up, even after 20 years of great performance, irrespective of what the NAV reads, like you said.
Okay, let's look at the HDFC Small Cap Fund. Feroze ji has a soft corner for HDFC AMC, and that's not without reason. One of the smartest and the quickest and the most consistent wealth creators on the Lal Street has been the HDFC AMC. Let's look at HDFC Small Cap Fund. 23,000 crores is what is managed at a net asset value of 126 rupees. The 3-year CAGR is 38%, and the fund was launched in April 2008. 16.7%. What do you like in HDFC Small Cap Fund, Feroze ji? What distinguishes it from so many of the small cap funds that have done phenomenally well over the last 6 odd months or so?
What I like is Chirag Setalwad, one. What attribute in Chirag Setalwad I like is the simplistic nature of looking at businesses, one. In small cap, being able to be value biased is one of the toughest tasks a fund manager can get. If you look at all HDFC schemes, when Prashant Jain had left, we analyzed whether value as a principle was ingrained into the company or it was only a Prashant Jain phenomena. We realized that even a small cap fund had a value bias, which is one of the toughest things to do, especially in a market like that. When you look at the number of stocks less than 5,000 crores, also there were 17 stocks when I last checked, and their performance, those businesses were smelled much before the rest of the institutional space smelled it. So Chirag Setalwad and his attributes, one. Second, Navneet Monot, who was the CIO, has become the CEO of HDFC. Anytime when there is a CEO who's a technical guy, who's a finance guy, and has been a fund manager, I feel more confident about that company. And third is, like you said, their long-standing pedigree of processes having been placed and the analyst depth, which is phenomenal. That's the
okay. I'll just add an aside on HDFC Small Cap Fund. They, like I said, manage 23,000 crore rupees, and the top 4 holdings are unusual. Just as Feroze Bhai has mentioned that they have a view towards value. So it's Sonata Software, Bank of Baroda, First Source Solutions, and of course eClerx. So it's a bit tech heavy, as you can make out given the 2 or 3 top holdings being in the tech space, but that's where value is at the moment. Banks are running away. You have a very strong traction coming into PSUs, but mid-cap tech is where you see a lot of action. So we've done 2 large caps in the form of DSP Equity Opportunities Fund and HDFC Flexi Cap. 2 mid-caps have been discussed, Kotak Emerging Market Equity and HDFC Small Cap Fund. And now, Feroze ji, comes the most exciting part. The sector that has gained all the eyeballs and all the money is the small cap space. What do you like there?
See, apart from HDFC Small Cap, I like Quant Active, which I think is very, very good. It has used Quant as an asset management company, has used the tax-free platform just amazingly. Sandeep Tandon, who's always had a treasury bent of mind, not an asset management bent of mind, brings in huge capability. And I'm telling you, after a lot of analysis, it took us some time to approve them. But after a lot of depth, a three-leg model which focuses on liquidity as well, which is not a primary decision making in other asset management companies. So it's a very complementary instrument or a fund into a product basket which is only driven fundamentally. So the way Quant has acted in certain situations in exiting some stocks surgically when there has been some challenges is just outstanding. Point one, they look at risk, they look at momentum, they look at valuation. So that's something which is very unique. And I think they sometimes become very small cap heavy, they sometimes become very large cap heavy. And that's why the agility is just outstanding, and a treasury bent of mind which Mr. Sandeep Tandon brings from his experience rather than a fund management perspective is very refreshing.
We are discussing a Quant Active Fund, and of course, no matter how much you praise Mr. Tandon, who's the fund manager and the CIO of Quant Asset Management Company, that's less. He brings a wonderful appreciation of how markets practically work in shorter term intervals, and that's also visible in the churn ratio of most quant funds that you would see. But Quant Active Fund, 6,000 crores is what they manage. The net asset value is 580, and the 3-year CAGR is 31%. Remember, Quant is something what the AMC has recently been taken over by Mr. Tandon. The track record is somewhere like 4.5 years of Mr. Tandon's performance, and Quant Active Fund giving phenomenal returns as far as shorter term durations are concerned. Feroze ji, one contra call from you. What looks good?
Yes, that will definitely be SBI Contra. Dinesh is the fund manager. Vasan R. Srinivasan is the CIO. And this is one fund which has actually true to label done contrarian calls, and we came into our portfolio a couple of years back. Of course, it has beaten Nifty by about 11-12% in the last after we've recommended it, it's beaten Nifty by about 20%. But I personally think that the kind of contrarian bets, and of course in a momentum-driven market, which is definitely chased by liquidity. If you look at the AMFI numbers are yet to come. We have a ground team which anticipates what kind of monies came in small cap last month. The number is 4,000 crores, which will come in the next few days from AMFI officially, give or take some 200 crores. So 4,000 crores coming into small cap implies that it's a momentum market, and that's been continuing from the last 5-7 years. In that, being contrarian for some portion of your money is valid, and then you take the best person there, that will be Dinesh.
So it's a very unusual fund to begin with. The name itself suggests a contrarian opinion to the market. And would you believe it, the kind of returns that SBI Contra Fund has made? The corpus is 16,600 crores, the net asset value 325, and hold your breath. The 3-year CAGR on SBI Contra Fund is 34%. This is the highest in the 6 funds that we've discussed, and that's why it's such a brilliant contra bet. I'll just tell you the portfolio. The top 4 stocks are ICICI Bank, Cognizant Technologies listed in the US, Gas Authority of India, Punjab National Bank, and HDFC Bank. So these are the 6 stocks, these are the 6 funds that Mr. Azeez has chosen for you, ladies and gentlemen, to create long-term and medium-term wealth by doing the least possible effort. These are very, very well-researched funds having a huge history of outperforming not only the Nifty but their own peer group, and they need to be taken with a lot of importance, because they come from a man who's been creating wealth for ultra HNIs and HNIs above the ultra level over the last 20 years. Feroze bhai, just as an aside, Anand Rathi Wealth was listed maybe 2.5 years ago, and it was listed around its issue price. But over the last 6 odd months, the stock has shot up very sharply because of the way the markets have improved and how aspirational India is making their wealth, being managed by professional investors. In your view, what are the 2 or 3 things that new investors, decent sized investors, should keep in mind as far as this rally is concerned? Some home truths from your side.
Shalji, on the business which we run is not the broader market, right? Sure, I can see. I personally think that we've always been giving a long-term guidance of 20 to 25% long-term growth, and we certainly believe that in 10 years, for 10-15 years, our compounded growth could be 20-25%. And it was December 14, 2021, so we could have finished almost 2 years now, and when we were saying that, people would take it with a pinch of salt. Now, 8 quarters results are given. 26% is the worst quarter growth on a year-on-year basis. 41 is the highest. So point I'm trying to make is, now the billability came after 8 quarters. We are in the business of committing and delivering, even to the client. And we've always had this DNA of saying, don't overcommit, undercommit and over-deliver. So that, I think, got established after 6-7 quarters when the market read us saying that, okay, they don't exaggerate. Second is, I think we have been a part of some indices globally also. We got included in the MSCI index. We got included in 3 domestic indices. And that also brings in some degree of credibility. And if you look at our assets under management numbers, we revised the guidance again. During IPO time also, when we gave guidance, we had undercommitted and over-delivered. During IPO, very few IPO companies don't meet their numbers because there's some degree of exaggeration. There also we've stick to the principle. Now, I think as the market is understanding our DNA, they're able to appreciate what is being said is not exaggerated. And that's, I think, one of the triggers.
Of course. And not only has Mr. Azeez created wealth for thousands and thousands of HNIs, he's also created phenomenal wealth for all the hard work that he's done himself. The second innings that Mr. Azeez wants to play is in Bollywood. Of course, that's a personal joke between me and him. But Feroze, 2 or 3 points that you'd like to mention on the ground realities of returns. Expectations are beyond the roof at the moment. How would you like to put across 2 or 3 home truths when it comes to investing in frothy markets?
Yes, Shailji, firstly, I think India has 670 lakh crores of household savings. The equity extent is so little, about 11-12%. So I think any viewer should not fall into the trap of lower equity if you're a youngster. That's one. There will be frothy markets, there will be cheaper stocks. But if we look at governments, if there is continuity, capital markets love that. The kind of money which is waiting on the sidelines, I go for a conference every year to Paris, and the kind of change in attitude of 500-600 fund managers is mind-boggling, especially over the last couple of years. So I would say that don't be too worried about frothy markets, because between the frothy markets and you, there are 2 layers of professional. That's your advisor or distributor, and there is a fund manager. 2 layers of professionals are there between the frothy market and you. Get the professional right, then you don't have to worry about frothy market. If you're going to say, I'm going to do it myself and then jump into frothy market, then there could be a challenge, there could be victories as well, but we have to look at higher probability of winning rather than big wins in itself.
Okay, and with that, Feroze bhai, this wonderful chat lasting over 27 minutes draws to a close. Thank you so much for suggesting these 6 wonderful funds. We'll again run them across to you on our screens. They are DSP Equity Opportunities Fund, HDFC Flexi Cap Fund, Kotak Emerging Market Equity Fund, HDFC Small Cap Fund, Quant Active Fund, and SBI Contra Fund. All of them will be running in front of you on the screen. Invest wisely. Think in the long term, 3 to 5 years bare minimum if you're getting into these funds. And the best way forward is a monthly SIP into all 6. Remain invested. This is a wonderful journey that's unfolding in front of us, and there are more and more leg rooms for the markets to appreciate in the longer term, of course with decent corrections and newer investors piling in. Thank you, Feroze. What a lovely day to have you.
It was such a pleasure. My excitement overshot the show to be with you. Thanks.
Thank you. So that's it, ladies and gentlemen, on Market Gurus. It was an unusual show that our team put together to get hold of a wealth manager who increases your wealth by suggesting good quality mutual funds which have to be held for the longer term, anything beyond 5 to 7 years, and investing in them on a monthly basis. Stay tuned to Business Today Television. More and more in the offing as far as financial news is concerned, and of course the best advice. Thank you.
Record highs on the Nifty all through, and the Gift Nifty indicates 21,000.